Hello and welcome back to my 10 favorite people. Hope you're doing well. So much to cover in today's video. We're finally going to do a side-by-side comparison between current price action and what Bitcoin did in 2019. We're also going to take a look at what happened to Bitcoin in the previous cycle when the S&P 500 broke above its previous all-time highs and then came down and retested them before continuing higher, something that I think is incredibly likely over the next few weeks or so if the S&P 500 continues this deeper correction back to the $4,800 region before continuing higher. We'll also talk about recent ETF inflow data. For the first time since these ETFs went live, we saw a zero net inflow day for BlackRock after a 71 trading day streak. And this is really showing that slowly but surely, demand and excitement is really starting to cool off for these new products, and that could result in us having a slightly deeper correction than most expect. We'll also do a brief update on Bitcoin's relationship to rates and if we're seeing something similar to what we saw in the previous cycle. And of course, we'll look at a little bit of on-chain as well. There's some similarities between the MVRV Z-score in terms of what we're seeing right now and what we saw during that mid-cycle top in 2019. Now let's go ahead and start by comparing current price action to what we saw in 2019. Now, full disclosure, there is a 0% chance that we perfectly follow what happened in 2019. We know history doesn't repeat, but it does often rhyme. And I think there's a lot of value in being prepared for something that's generally similar to this, no matter how bullish you currently are, because you don't want to be blindsided by this deeper correction and end up making emotional mistakes, or even worse, getting liquidated on leverage positions. And of course, we're also seeing a lot less volatility in this cycle. In the previous cycle, these were 30% swings or so. More recently, it's been 15 to 20% swings because as Bitcoin has gotten larger, the volatility has decreased. But for anybody that was around in 2019, they'll remember this volatility and chop was incredibly draining emotionally, because every time we'd get one of these strong 30% bounces, everybody would be convinced that we're back and going a lot higher. And then once the correction occurred, everybody would start flipping bearish and saying we were going a lot lower. And that kept happening over and over again until we capitulated. And we're seeing something very similar here, even though the price swings are smaller. I mean, I'm sure a lot of you remember what sentiment was like at 74K. I mean, ETFs were going to have these massive inflows for the next few months. We're going so much higher. We front ran the institutions. There's no way we can have these large corrections because ETFs are buying. And then you get the large correction, everybody starts panicking. You get the bounce, everybody gets euphoric. You get the correction, especially if there's some macro news or war headlines to spread some fear. Everybody gets bearish again, and then you get the bounce, and everybody starts dunking on the people that were bearish once again, and the cycle repeats itself. But the similarities are definitely crazy. Both price structures start with this large 50 to 60% capitulation event, which completely nukes sentiment and makes everybody give up hope in terms of any short-term bullishness or any excitement to buy the dip because we might be going higher in the short term. Everybody kind of gets crushed by this last capitulation event. And what happens is most people don't accumulate at these lower prices because everybody is expecting prices to go a lot lower. In 2019, everybody was waiting for 1,000 to 2,000 Bitcoin, even though Bitcoin was already at 3K. And of course, as I'm sure a lot of you are aware, in the lows of 2022, most were waiting for 10 to 12K Bitcoin, including myself. I definitely bought some at lower prices, but I didn't buy anywhere near as much as I should have because I wanted to have dry powder in case we went lower, whether that was because of another exchange going down or macro fears. And of course, that ended up being the cycle low. And then nobody really realizes that until prices go a lot higher. We then get a very quick and strong expansion into reaccumulation. Same thing here, very quick and strong expansion, reaccumulation. I know the reaccumulations were much quicker and shorter in the previous cycle, and that is different this time around. And maybe that's why we were able to get all the way back to previous all-time highs. But the general structure is still the same. In both cases, you then see expansion number 2 into reaccumulation number 2, and in both of the second reaccumulations, you get a big deviation to the upside, which traps a bunch of longs and punishes them with a roughly 20% pullback. And then you enter the final blow off with a little pause in the middle, final blow off with a little pause in the middle, and then you see sentiment get absolutely euphoric. We're going so much higher, left translated cycle, 100K Bitcoin before the halving. I'm sure a lot of those phrases sound familiar because that's what we were hearing just 2 months ago. And then finally, you really start to see the sellers begin to step in. If we zoom into price action in both cases, you start to see wicks showing up on both sides as volatility begins to pick up, and you end up getting these lower highs, lower lows. Even on this recent bounce of like 5%, everybody is getting mega bullish again, saying that was the bottom. And maybe it was, but I think there's a lot of danger in being overconfident that the low is behind us and we have to go higher in the short term. So we'll see what happens. Again, it's not going to play out the exact same way. That's essentially impossible. But I do think that a lower correction wouldn't be that big of a surprise and would definitely be healthy for Bitcoin. And this is why I have the cash position that I do in case we do end up getting that correction, but I still have my long exposure in case we don't. It also looks incredibly likely that the S&P 500 is going to continue its correction lower. This was an aggressive sell-off. We're getting the bounce on the 20-week moving average we discussed, but I don't think this is enough cool-off for how insane of a move we've had over the past few months or so. And funny enough, in the last cycle when the S&P 500 put in this all-time high retest, it continued higher and kept putting in new highs, whereas Bitcoin had already kind of run out of steam and started consolidating lower. And with the ETF excitement and ETF narrative beginning to lose some of its steam and excitement, that could be what causes the divergence of Bitcoin slowing down and consolidating longer than the S&P 500, which can just continue higher here in the short term once it retests that previous all-time high, because of all the passive buyers from 401ks and IRAs and all the bid that the S&P 500 gets passively as long as people have their jobs and continue buying weekly, monthly, at whatever cadence they decide to. Obviously, rates is a major topic of discussion as well, and we've definitely covered it often on this channel. And we do know that Bitcoin topped right before rate cuts started in 2019, and then that uncertainty and market instability that caused Bitcoin to sell off forced the Fed to do that first rate cut, but it wasn't enough, and Bitcoin kept going lower until we finally got zero interest rates. I don't know if this is going to happen the exact same way this time around. We do know the market is not expecting rate cuts until September in terms of the highest probability of that first rate cut. But if something were to break in the economy tomorrow, the Fed would not hesitate to cut rates. And maybe even though the market thinks it won't happen until September because of inflation fears, we end up getting a rate cut in June because something breaks in credit markets, maybe the unemployment rate spikes. And I promise you, if one of those two things happen, the Fed will find a way to cut interest rates even with inflation at 3% because they cannot afford a recession or a spike in the unemployment rate in an election year, no matter how non-political they want to say they are. So I think it's too early to call this one. We'll monitor the rates and their relationship to Bitcoin going forward. But as of right now, it does look like the higher for longer narrative is putting downward pressure on risk assets, but we're going to have to wait for the monthly close. That's when this updates. And then we could maybe confirm that a potential local mid-cycle top has been put in. And then finally, in terms of on-chain, the MVRV is a very strong on-chain signal. It essentially compares Bitcoin's market cap, which is Bitcoin's last traded price times the supply, divided by the realized cap, which is essentially every Bitcoin in the network. What price was it last moved at? And let's add up all those prices to get the realized cap. And the realized cap tends to be a very strong floor on price. You can see whenever the black Bitcoin price line gets close or below the blue realized cap and it ends up in this green zone, that tends to mark macro bottoms for Bitcoin. But when we get incredibly extended from the blue realized cap line, we enter this red overvaluation area, and that tends to be macro cycle tops. And the z-score just measures the standard deviation compared to what the market cap to realized cap ratio normally is. So when you see a very high z-score, it means there's a much bigger gap than there usually is, and it's likely we get some mean reversion over the next few months. And this yellow area has kind of been this mid-level where things aren't incredibly undervalued, but you're also not in the incredibly overvalued region either. And funny enough, in every single cycle, we've seen a correction and maybe some profit taking from the macro bottom buyers once we enter this yellow region for the MVRV, because there's so much unrealized profit that starts to get realized once those Bitcoin move on chain at higher prices. Hopefully I explained that well. I don't want to spend too long on this video explaining how this metric works, but you can tell by its track record that it tends to be a very solid signal in terms of, let's say, we'll call green undervalue, we'll call yellow fair value, and we'll call red overvalued. And Bitcoin tends to get a correction the first time it enters the fair value after testing the undervalued region. And for those reasons, whether it's the on-chain, whether it's rates, whether it's the ETF demand slowdown, whether it's the S&P 500 relation, or the comparisons with 2019, that's why I still have a conservative portfolio and I haven't bought riskier altcoins that are going to suffer way more volatility if Bitcoin goes down. And maybe to some of you, 80% crypto, 20% cash isn't conservative at all. And of course, it all depends on one's risk tolerance and time horizon, but I'm very comfortable with this portfolio. And maybe a lot of you are thinking, okay, with all this evidence of a mid-cycle top, why do you still have an 80% allocation? And there's a couple of reasons. One, if I sell to buy back lower, it's harder to manage emotions and I have to worry about taxes more. But two, there's also a lot of bullish things that can happen in the short term. If the S&P 500 ends up seeing a huge recovery, if we end up seeing ETF inflows come back, we're seeing some decent bullish on-chain metrics that maybe I can cover in my next video, like Bitcoin holding the short-term holder cost basis as support and how it tends to be support in bull markets. We also had a huge leverage wipeout recently and a reset in funding rates, which tends to be pretty healthy and means prices could go higher in the short term. And that's why I maintain my upside exposure, because I do want to be okay and be able to have dry powder if we do correct deeper from here, but I'm not willing to give up my upside exposure in an asset class that I think does well over the longer term, thanks to government deficits and currency devaluation. But I think in my next video, we'll cover the left translated cycle thesis and why it's possible Bitcoin could have one last move higher in the short term, as we mapped out in this yellow case here. I'll cover that in the next video, and we can talk about a lot of the short-term bullish stuff that's going on that could maybe send Bitcoin higher in the short term. But this 2019 kind of similarity is the one that I'm really trying to be prepared for in case it happens and not get blindsided by. But anyway, let me know what you expect. Were you around in 2019? Were you as involved in the space, and were you following it as much back then as you were today? And man, was this an emotional roller coaster back then. And it honestly makes Bitcoin's current volatility almost insignificant in comparison to what we had to go through with those 30% swings week after week. But anyway, thank you so much for the support on the recent videos. We'll continue to monitor all these things going forward, and I'll talk to you soon.